Coming up on Market to Market. Rural America was the trump card to help Republicans claim victory across the country. And U.S. veterans find new ways to serve their country down on the farm. Those stories and market analysis with Mark Gold next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, November 11 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A TV producer will tell you good television features conflict and drama. The most recent political contest featured a cliffhanger, with a principal character leaving the world in suspense, promising only to consider the results carefully. Political pundits predicted a series finale for the Republican Party standard bearer, but rural America responded, along with millions of urbanites, and told the businessman, "You're hired." Paul Yeager reports.
Donald John Trump shocked the establishment this week, winning this cycle's edition of Election, despite losing the popular vote to Hillary Clinton. Voter data indicates the New York businessman's attention to rural America may have given him the boost to overcome huge deficits in major metropolitan areas.
I pledge to every citizen of our land that I will be president for all Americans, and this is so important to me.
The celebrity businessman will now pivot to being the 45th president of the United States as the jockeying for cabinet positions begins in earnest. Garnering the most attention in the countryside will be the next Secretary of Agriculture. Trump had assembled a 70-member task force during the campaign, filled with lawmakers and donors. He believes the group will help him choose the next head of USDA, as well as chart a course for agricultural policy. Trump has vowed to get tough on trade, calling for a more level playing field, or at least an improvement for the United States. Both candidates were against the Trans-Pacific Partnership, and Trump called the treaty bad for American workers. Even in light of his call for dumping the most recent policy, agricultural advocacy groups cite the need for foreign markets to help boost demand for U.S. corn, soybeans, and other farm products. During the 2014-15 marketing year, roughly 13% of all production was exported to more than 100 different countries. The top destinations for those producers were Japan, Mexico, and Colombia. Farmers have been encouraged by the president-elect's stance on biofuels. He addressed the Iowa Renewable Fuel Summit membership back in January.
The RFS, which is Renewable Fuel Standard, is an important tool in the mission to achieve energy independence for the United States. I will do all that is in my power as president to achieve that goal.
The EPA, another target during the campaign, is slated to release final renewable fuel standards by month's end. Climate change advocates will likely see a foe at 1600 Pennsylvania Avenue. Trump campaigned to cancel the Paris Climate Accord. The nominee says regulations are getting in the way of the energy business. Crude fought an early sell-off to finish their day higher after the polls closed. Overnight trading on stock markets around the world experienced a sell-off on the likelihood of a Trump presidency. U.S. markets whipsawed as the Dow jumped 257 points and encroached within a hair's breadth of all-time highs on Wednesday, and then set a record Thursday. Trump will have a Republican-controlled House and Senate to work with by the time he takes the oath of office in January. While some lawmakers have called for splitting supplemental food policy from the agricultural safety nets, the president-elect has vowed to keep the Farm Bill, as we know it, together. For Market to Market, I'm Paul Yeager.
On Friday, many paused to honor and thank all U.S. veterans and current members of the military on Veterans Day. Farmers throughout history have taken up arms to defend their country, returning home to beat their swords into plowshares. While opportunities for vets have been improving, there are still those who have difficulty finding and keeping a job. However, in rural America, several young farmers have joined forces to improve their chances of success after returning from the battlefield. Josh Bittner has this week's cover story.
Roughly 2.5 million men and women have served in the armed forces during the post-9/11 era. And many veterans have willingly taken on multiple deployments only to wage an uphill battle finding fulfilling work back home.
When you're in the military, at least for me, I was outside a lot, heck of a lot more than inside. So, it's kind of a natural, easy transition. And the same kind of dedication and motivation it takes in the military is what it takes to run a successful farm.
Dan Romas, a Marine, Army, and National Guard veteran, has childhood ties to family poultry operations, and his roots led him to start up his own egg-laying flock. In the Army, Romas was part of the 2007 Iraq troop surge. He came away with post-traumatic stress disorder. Through Veterans Affairs, the soldier identified therapeutic strategies and connected with several groups that offer assistance to entrepreneurial veterans.
I can't think of any better way to continue to serve the local community and state than by providing them with a farm-fresh, locally sourced food.
Prairie Pride Poultry has been a successful venture for Romas. He has provided value-added eggs to the community.
Good job, girls.
And diversified his Grand Island, Nebraska operation to add broilers and hogs. One helping hand for Romas was Davis, California-based Farmer Veteran Coalition, which awarded him a small grant to purchase equipment and feed.
This gentleman is driven, he's tenacious.
Though not a military veteran himself, Farmer Veteran Coalition founder Michael O'Gorman brings over 40 years of agricultural experience to the table, spending the past 2 decades managing 3 of the nation's largest organic vegetable operations. Motivated by his daughter, who was traumatized at Ground Zero on 9/11, his son joining the military a week after the terrorist attacks, and the prospect of his own retirement amidst a national crisis-level shortage of next-generation farmers, O'Gorman began to explore the parallels of military service and land stewardship.
Our military, our all-volunteer military right now has 2 really interesting components. One is that it's a fraction of 1% who now serve in the military. The other is it's extremely rural in its makeup. The very high disproportionate number come from small rural communities, and that's where our farmers come from. And we're finding that this is a geographically and temperamentally a really good fit.
With just 9 members at its inception, a trickle of interest turned into a flood of support for the FVC, which now claims over 8,000 members in all 50 states and U.S. territories. And for the coalition, partnering with other organizations has taken awareness even further.
It's a tremendous benefit for the marketplace.
Marketing is crucial to success, and locally grown branding in the Bluegrass State turned out to be exactly what O'Gorman wanted to pursue.
The one thing we noticed was that there wasn't anything focused on consumers. And like Kentucky Proud, we thought, well, is there an opportunity to help raise the profile at the point of sale, products that are grown and raised by our military veteran farmers? And thus, the birth of Homegrown by Heroes took place in early 2013.
Formulated to denote products on store shelves produced or processed by the state's farm families, Kentucky Proud was adopted as the official state agricultural marketing brand by the Kentucky General Assembly in 2008. In 2012, the Commonwealth's former agricultural commissioner, James Comer, tasked his department with development of a retail plan to assist unemployed veterans through farming. Several Kentucky vets were also FVC members, and when Homegrown by Heroes kicked off, word reached O'Gorman, who contacted Comer. The two soon charged forth together, taking Homegrown by Heroes nationwide. With over 550 members in 49 states and Puerto Rico, farmer veterans are labeling farm products, which allows consumers to help secure the future of America's food systems.
At its infancy, we thought, maybe this has an opportunity to go beyond Kentucky and really be a brand that helps all of our farmer veterans across the nation. And just within the 2-year plus time frame, we see that that's actually taking shape.
Within Kentucky's borders, an enterprising veteran, Alvina Maynard at River Hill Ranch, an alpaca farm outside Richmond, has launched a Homegrown by Heroes endeavor offering several products from one source.
This is more than just about the alpacas. This is more than just about growing clothes. It's about creating a paradigm shift in how we are spending our dollars when it comes to our clothing, which, unless you live in a nudist colony, is kind of an essential part of our everyday life and society.
In the long run, Maynard aims to save her customers money.
As Americans, our fashion industry drives us to go back to the store and get a whole new wardrobe every season. That's how they make money. And so they want to get cheap materials that aren't really going to last for very long because they want you to go back and buy more clothes.
Graduating from the Air Force Academy in 2005, Maynard served in South America, where the Andes Mountains are the native habitat of her livestock, which were first imported to the U.S. in the mid-1980s. Proponents say alpaca fiber is stronger, more versatile, and lasts longer than wool. And once the Surrey breed, known for its luster and softness, no longer produce quality fiber, the animals are culled, fetching $8 to $14 per pound on ground meat and cuts. Knowing when and how to get into promising markets is a difficult task, riddled with pitfalls. But Maynard and fellow veterans like Romus attribute the wherewithal needed to skills they acquired serving their country.
In the military, you're adjusting to things at the very last second. You can plan, and planning is important, but you plan for every single contingency possible because you never know what's going to go wrong. And so that's exactly the same in farming.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The harvest market continued to pressure prices, but election returns and a bearish WASDE revealing an even larger record grain crop made for a great deal of volatility. For the week, December wheat lost 12 cents and the nearby corn contract shed 9 cents. Soybeans were caught up in the market sell-off at week's end as the January contract weakened a nickel. December meal followed suit, dropping $1.20 per ton. In the softs, December cotton continued down, moving 9 cents per hundredweight lower. Over in the dairy parlor, December Class 3 milk futures lost 13 cents. The livestock sector was a bright spot as the December cattle contract added $2.88. January feeders increased $3.18, and the December lean hog contract rose 98 cents. In the currency markets, the U.S. dollar index rocketed forward 196 basis points. Crude oil gave back post-election gains to fall 50 cents per barrel. Gold, which surged before the election, saw money go elsewhere by $80 per ounce, and the Goldman Sachs Commodity Index weakened 4 points to finish the week at 350.65. Here now to lend us his insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Nice to be back, Mike.
This was a crazy week, and I'm sure, like a lot of folks, you were up watching those election returns and trading those results.
I was sitting there. I was actually in Wichita, sitting in my hotel room, and had the computer there, and I'm watching this volatility, and it was unlike anything I've seen. To give you a perfect example, in the bond market, we made an outside up day and then an outside down day all on the same day. I don't know that I've ever seen that. The Dow rallied 1,200 points off its lows in 24 hours to make new historic highs. I mean, it's just amazing.
It was incredible. And one of the stories that I was watching as the election results were rolling in was the dollar. Yeah. As Donald Trump won states, we continued to see the value of the dollar erode, and then it shot right back up. Yeah. And we've got a question here from one of our followers on Twitter. This is from Marty Hedervig in Buxton, North Dakota at Sat Monster. Marty's asking, can Mark address the U.S. dollar versus the Brazilian real? Because it is a big deal now.
It certainly is. And the dollar closed back over 99 cents. Obviously, the par or a dollar even would be the next resistance. And that's going to put pressure on the Brazilian real. That makes their products cheaper for the Chinese to buy, more expensive to buy our products here or anybody else that's looking to import, particularly soybeans. So it's going to have a major impact. The dollar strength is what it is. If we do close it over $1, we can move it significantly higher, and that'll make exports even tougher. But the interesting thing is during the last couple of days since the election, as the dollar was moving higher, we saw 40-cent rallies in beans, a 30-cent break, a 30-cent rally, a 30-cent break. It didn't really seem to have that big of an impact. It had a little bit more of an impact on the wheat and the corn, which kind of had a little bit of a rally and then sold off again. But it'll have a market impact, particularly if we close the dollar over par.
Let's assume we get to closing the dollar at or near or above par here in the short term, 2-3 weeks from now, and the Fed decides to raise interest rates in December. Is that a catalyst at this point to take us much higher in the dollar?
It could be. As long as I've been around these markets, which is 40 years, money travels to where the highest interest rates are. And we will see an influx of people looking to buy dollars to get those higher interest rates if it happens. So they can go hand in hand, and we can see higher U.S. dollar prices and lower interest rates, or excuse me, the bonds moving lower, but the interest rates moving higher. So that's certainly a possibility. I believe interest rates could move higher and faster now, particularly with President-elect Trump, than it would have under a Clinton administration.
All right. You mentioned the headwinds this placed this week, at least, on the wheat market. We saw wheat down 11 cents. Are we just heading back to that $4 bottom of the range to trade still within it?
Yeah, it certainly looks like it. We've got some issues out here when we look at Texas, Oklahoma, Colorado, Nebraska, the Central Plains states. We're pretty dry. We've got this potential drought in the southeast, and a lot of people, including myself, believe that spring and summer droughts are generated from the southeast part of the country. NOAA confirmed that we're starting to turn into La Nina out here. So that can have an impact. We saw some problems in Australia. We saw some problems in Argentina. Do I want to be bearish at $4 wheat? No, I don't want to be bearish at $4 wheat. So if guys have sold wheat out here, certainly for the next 6 months, I'd want to re-own a May call option to keep the upside open.
Okay. Jumping down to take a look at the corn market, we saw 8-cent break on the week, despite the fact that USDA did something I've never seen before in a November WASDE, which was raised North Dakota yields 17 bushels per acre, Mark Gold. A, do you trust that number? And B, what does that tell you for this corn market moving forward?
I don't know if I trust the North Dakota number per se. I trust the general number.
Okay.
The corn I've seen around this country, and as you know, we both travel and see a lot of corn. This corn crop was in pretty darn good shape. We had good rains. We got it in on time. Everything looked perfect. So to see these kind of record yields is not surprising to me. What was surprising was it as good as everybody thought? I was in the camp that maybe we'd shave it a little bit on this report. To tack on another couple of bushels was a shock to the market. But the corn's out there. The beans are out there. That's where we're at.
Did we price in that shock this week well enough? Are we now back to looking at demand on the corn side?
Well, certainly demand on the corn and the bean side is going to be critical now. What's been keeping these markets in their head above water, even though it's a pretty low level of water, has been the fact that we've had the notion and the realization of huge crops, but we have also had huge demand out here. Unprecedented bean demand. The USDA raised exports by 25 million. That's strong. And is it going to stop anytime soon? There was some talk that maybe the Chinese were buying ahead of the election because they were worried about Trump coming in. And there's been talk that what we've seen here in that 40-cent rally that we saw in the beans overnight was the Chinese and other people getting into this market worried about what Trump could do. Have they bought enough to satisfy what they think? I think when it's all said and done, I don't believe President-elect Trump is going to really want to dismantle our export market and some of these trade deals. I think some of the trade deals that are really unfair, he might take a look at. But the president-elect has to be sitting today thinking, I am elected president of the United States because of the rural farm vote, period. And is he going to turn his back on the American farmers now? I don't think he's going to do that. So I think it's long-term positive for American agriculture.
Okay, and so you touched on the record bean crop, which was reported in the WASDE, plus the record bean demand, which we continue to see every Thursday from USDA. This break we've had, we're down here 986 and change. Are you a buyer in here reowning beans that were sold at harvest?
Not right now. I've been saying for quite some time that I thought we would see a rally in October, which we did. And then I thought November, mainly because of the harvest finishing up and the last bit of that harvest pressure and where we're going to put all this grain and the logistics were going to be tough, that corn and beans would move lower in November. We're through the election now. We're through the WASDE report. What's going to rally this market? But, again, we've had two large rallies just in the last few days out of nowhere. I don't believe with a 480 million carryout in the beans, we're going to be able to sustain that unless we see huge Chinese buying. This week's number was 1.1 million metric tons on the exports. It's less than half of what it's been. So that may be an indication maybe they're going to back off. If they back off, the rest of the month could be tough, and maybe even into December. But longer term, starting into January, I want to be long grains, corn, wheat, and beans.
So it's definitely a crop worth reowning. Just today is not the right time to be doing it.
I would be a little patient here.
Okay. Let's take a look at these livestock markets. As you mentioned, record high in the stock market. Yeah. We saw live cattle pull higher. Yeah. Is this that old stock market wealth correlation to fat cattle, or is something else going on?
The numbers may not be quite as big as we had thought. Certainly the last report we had showed that the numbers maybe not be as big as what people have been thinking. We've had to bounce. We had a gap in the cattle. We had two gaps in the cattle. We filled one, left the other one unfilled, turned it back up the last couple of days. But we've had this stair step down, and every time we do get a rally, it just makes a new low. We've had at least 13 of these breaks and rallies. Is this going to be the one that's actually the one that's going to break this down bear trend line and push us higher? It's really too early to know on that. We still have a lot of cattle out there. But as you mentioned, the stock market at record highs, people think business is going to be good and people are going to be having some wealth out here, and that the world hasn't collapsed out here. And as I've said, in general, you want to know where the cattle market's going to go, look at the stock market. If we can hold these gains in the stock market, I think we'll hold these gains and even move higher in the cattle. If something happens to the stock market, somebody turns this thing off for whatever reason, then the cattle will make another new low.
Are you hedging in here at these live cattle
absolutely.
prices?
We're going to use some put options to protect the downside. You can go out to April and spend $3.5, $4 on the fats, $4.5, $5 on the feeders to get protected. And I think that makes some sense here, and hope we get a $20 rally on both sides of the market.
All right, and you touched on feeders there. Again, we're seeing a nice bounce this week, $3 to the upside. Same story, we're relying on that break in the corn. Is that really moving us here, or is it the corollary to live?
Certainly the corollary is alive, and I think that's part of it. But again, I think there's just more optimism. We have the election out of the way. We've had stock market make new highs. Guys feel a little bit good. The cash market finished just a little bit softer here, but a lot better than a lot of people thought it would this week. The big key is the next buck in this cattle market. If we can close $1 higher over some of these resistance areas like 106 in December cattle, then we've got a chance to maybe push it up to 112, 113. So let's keep our fingers crossed that the stock market stays intact and that the cattle market can move higher.
Keep that money flow coming in.
That would be great.
The live cattle. Lean hogs, Mark Gold. We've had concerns for the past 6 months about processor capacity. As these hogs are coming to market. We seem to have found a nice range here in the upper 40s. Can we stick in that range? Are we past those processing concerns?
I think so. Part of it was the hurricane and slowing down production and backing up hogs. Hopefully, I think the market's built that into it now. Sure, we've got the winter months to get through, which generally aren't that great. And hopefully we can head it higher into the summer months. And the way the structure of the market now is saying it's going to get better, as it should. Again, we're at pretty cheap hog prices here relatively. Yeah, am I going to keep a cheap put underneath these markets? Yeah, but I'm not going to spend a lot of money. I'm going to spend $2.50 just in case there's something out there we don't know about. But I think there's some upside potential in this market, and particularly if cattle moves higher, we're going to stay competitive and all that. So I think hogs have got a chance there, particularly if cattle stay strong.
All right. Mark, before we let you go, I want to talk to you about this crude oil market. It was another incredible night of volatility on Tuesday night, election night for crude oil. Down, 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 and then substantial rally. Where does that put us as we sit here looking out for the remainder of November?
You know, I think the crude's way overvalued right now, but it's going to be interesting with the new administration. I don't think the Saudis can make the same kind of contributions that they've made to other candidates out there, and that may have an impact on our oil prices and to move them lower out there. But we still have obviously big concerns in the Middle East, and the crude oil, again, is one of these markets that volatility can hit very quickly. But I think just on supply and demand, we could move the crude oil even lower in here.
Okay, we're in the mid-40s, could see us pushing into the mid-30s. You think we're $10 of?
Yeah, maybe, I don't know. Yeah, 34 to 36, somewhere in that range, I think would be a fair price. But again, if anything does happen, if there's a glitch out there, you know, we can be right back at $60 crude in a heartbeat.
In a heartbeat. Well, Mark Gold, thank you so much for taking the time to join us this week.
Thanks. It's been a pleasure to be here on Veterans Day, and we want to give our honor, our salutes to all the veterans out there as well.
You bet. Of course, we wouldn't be here without their service and sacrifice, so thank you. That wraps up the broadcast portion of Market to Market, but Mark and I will keep the conversation going, including answering more of your questions during Market Plus, available on our website. And this week on the M2M podcast, one of our analysts counsels you can make money in a down market. Find out how wherever you get podcasts by searching MTOM. And join us again next week when we'll examine the debate over antibiotic-free labeling. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.